Victoria, what do you do with the stock?
This to me is a sell. I want to sit it out at this point. I think there's more risk you're going to retrace down to the 320, 330 levels than you are that you're going to push up to 400. Number one, you got to realize this is a huge global company. They've only about 54% of their revenues and sales are here in the U.S., and we're seeing that whole global picture slow down. China is a massive problem for them, but they also saw in the Middle East, Africa, and Europe also slow. Number two, construction is their biggest segment, and that was down 9% year over year. That's a bad miss for them. Manufacturing and machinery, that area is still very, very light. For me, I understand there might be a little bit of catalyst, but if you look at overall what might happen with inventories, I think expectations are a little bit too high. And the only reason the stock has come up to the 380s level is because of the Chinese stimulus. You can almost track it from where it bottomed out to where it is now and say, oh, that almost tracks exactly with when China announced their stimulus. And if the stimulus isn't doing what we think and China is not going to pick up the way that we initially thought it might, then that could be a big black mark for Caterpillar. I look to sit this one out a little bit, take some profits if you got them, and look for something a little less economically sensitive.
Let's talk about a stock that is going to the woodshed today. Eli Lilly tumbling after the drug maker missed third quarter estimates. Angelica Peoples has the details. Angelica.
Hey, Tyler. It is all about GLP-1s, of course. Mounjaro and Zepbound both missing estimates in the third quarter. And, of course, a miss on those drugs is concerning enough for some investors. But I think what you're also seeing in that weakness today is the uncertainty.
This is not a function of supply, though. It's a function of these wholesalers and retailers having capacity and wanting to stock every dose, which they often don't. So, we're just balancing all these parts, and there isn't excess supply, but we haven't been stimulating demand the way we had originally planned. So we're pausing that a bit. We did pause that, but we're restarting here.
And so what you're hearing him talk about is this dynamic where Lilly has increased supply, and they're saying that wholesalers had enough and they're working through that inventory instead of buying more. But that begs the question, right? Is this a supply or a demand problem? And Dave Ricks today on the earnings call is saying that it's neither. It's not a supply problem and it's not a demand problem. But I don't think that you're seeing people really buying that and still wondering exactly what is happening here. Now, Lilly is saying that they're going to start some promotional activities for Zepbound starting in November. So things like direct-to-consumer advertising, as well as looking at those healthcare providers giving away some free medicine and trying to get more demand there. But again, a lot to pay attention to there, guys.
All right. Thank you, Angelica. So, Victoria, is this a slip or a blip? And if it isn't, it's certainly a big one, 900 million to $1 billion.
Absolutely. For me, it's a blip. I do not think their CEO answered questions very well, but I think they're going to come back from this. Number one, they're getting some of those generic compounders off the market. That's been a problem, right? When they didn't have enough supply, the FDA allowed them to come in and generate their own generic semi-glued for the market. They're going to get those off the market. Number two, Zepbound. That could be approved for sleep apnea, which would get it in with Medicare, which is a huge market for them. Number three, I think this was still working through the supply and demand issues. So I think you had inventory destocking because people were concerned, oh, if we have constrained supply and supply chain issues, I need to keep more on hand. Then suddenly they destocked as supply became more readily available. And now I think we're going to see more normalized levels. I do not see it as a demand issue at all. If anything, I see that market continue to grow globally. But yes, they need to advertise more. They need direct to consumer. They need to compete with some of these easier ways people have been getting semi-glued. But I think they're on top of that. And this is a rebound and a $1,200 stock for me.
Yeah, wow. So buy the dip. Buy the dip.
Buy the dip.
All right. And the slip and the blip.
Carvana also reporting after the closing bell today. That stock is up 300% this year. For the full story, and what a story it is on this one, we turn to Phil LeBeau. Phil?
Kelly, when Carvana reports its results for the third quarter after the bell, three things that people will be looking at, really the metrics within the third quarter. And the first one is profit per vehicle. Also, have they done a good job limiting inventory? This has really been their calling card over the last several quarters. Essentially, they're moving the vehicles quicker when they buy them, turn them around and sell them again. And then there's the sales growth. They are in the sweet spot of the market because used vehicle sales, they're increasing around the country, and that's certainly been the expectation for Carvana. Look at the growth from the first quarter to the second quarter. Expected that the third quarter sales will top 106,000 vehicles. As you take a look at Carvana over the last year, keep in mind that that profit per vehicle, why is that so important? It's their metric. It's the metric to say, okay, how much money are you making off of the vehicle you're buying from somebody, turning around, and then selling to somebody else? The expectation is for it to be more than $6,500 for the third quarter. Don't forget, tomorrow on Money Movers, you do not want to miss what we have coming up. A first on CNBC interview with Ernie Garcia. We'll talk about the third quarter and what's really been a heck of a year for this stock and for this company.
Indeed. Phil, we appreciate it. And Victoria, for you and the trade on Carvana, I'm very curious what you're going to do with this one.
This to me is a sell. Mostly it's the expectations are much higher and the stock is up 300% this year, up 61% in the last month and a half. And I think they're going to see a little problem with that margin as he discussed, because we saw that on CarMax, right? CarMax had to discount to move units. They may hit that 106, 107 unit movement, but I think possibly we're not going to see the margin growth there. And if margin growth stalls out, some of this rally here might have just gotten a little bit in front of it. Also, how much of a moat does their technology have? As everybody else gets more into selling DTC, everybody else's technology catches up. I'm not sure if this is sustainable, that they're going to have the momentum they've had. Remember, 2 years ago, the stock was almost in bankruptcy. So I think a little bit for me, I'm going to sit earnings out, maybe take my 300% profit, see what they do on margins. I just get a little worried after the CarMax results that they're just not going to be good enough, because that bar is a lot higher than it used to be 6 months ago.
Great point. Victoria, thank you so much for your time today. Victoria Greene with G Squared Private Wealth.